So, hello. How's everybody doing? Hope everybody's having a great day. This is 50 pips, rocking and rolling in a free world. 22nd of March, 2017. No trade calls, no recommendations. Every response for their own stuff. We're here for educational purpose only. And again, let's do this. So, how's sound, everybody? So, Anna's in the house. Hopefully, no children were harmed, no parking tickets, no speeding tickets. Anna, we're all good, ready to rock and roll. Good stuff. Okay, good stuff. Okay, so good thing I'll do the talking. You can catch your breath. Um, okay, so guys, as I said, really fairly busy to say the least, but as always, a promise is a promise. So I said if things were interesting, I would do a quick update on Wednesday, and I think I can't hide from the fact that things are interesting. So. My pleasure. As always, all the charts are on the blog. The weekly outlook is on the blog. So for people who follow the blog, people who follow all the free YouTube videos, hey Keen, how's it going? Our outlook should be fairly clear. So my purpose with these morning sessions is just to do an update, look at what is interesting, and not necessarily to go through free content you can just look at. So it's just to try and pay it forward and answer any questions. So I'll talk a little bit about what the market is doing, but feel free to ask any questions. Nothing's off the table. As usual, you can ask me anything from my morning routine to my squat, to my chipping, to my putting, to charts, anything you want. And I'll try and answer as many questions. We'll try and run this not too long because we do have some trading to do. But so again, just shoot, and you only have to ask your question once. I'll get to it. They're all recorded, okay? So a couple of things. IWM, right? So Russell small caps leading. This is something we've been talking about. Fairly aggressive move, okay? So as we said, in the context of these huge ramps up from the election low, so far we've only got rounding errors, but the cracks are starting to come in. We talked about this for a while, but especially on the IWM, the move is not normal, right? It's fairly strong. So you got to pay attention to that. So I think this is a nice little development for us, which should be looking for the short side, right? And the key thing is going to see, do we get follow through? That's what you want. And this is not the kind of market you want to get aggressive fading, right? If you're on the wrong side. And keep in mind that what we've been saying is, when there's no buyers left, it can get ugly quick. But again, going into today, this is the key. If we can catch a bid here, then this could easily bounce. If this lets go, aggressive to the downside, okay? And something which we've been talking about for a long time, and some of us are still old enough to remember that markets do go down, right? You see what's happening here. We said, we talk about stairs up and elevator down. We talk about how we can undo the low liquidity ramps, those really low volatility range days where just the market keeps on pressing higher or lower, it doesn't matter. But what is the context here? The context is that you see what's happened in one day. We've moved all the way. We've moved back to, right? What is that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. Well, probably just eyeballing it. We've given back about a month's action in one day. You see what I mean? Risk happens quick, right? Risk happens quick. So I think that's particularly interesting. We've had a beautiful little action on XLF with, that was really the tell with those financials selling off, especially after the rate hike. You'd expect them to do well. And, we talked about the fact that these were looking heavy, so quite nice. Now, remember how we talked about the fact that it's pretty much always the same movie, and we were talking about the fact that why would you want to go long crude into a brick wall, right? Even if we're going higher, when positioning gets really crowded on one side, it usually doesn't end good. And we talked about this not ahead of time, but after crude played out, we said, watch out, the bonds is exactly the same thing as we're going into the FOMC, right? We would not be surprised to see us take out these lows pre the release, but chances are after the release, this is all baked in. We're going to go back higher. And look at this, just like clockwork. We clip the stops, reverse higher. Beautiful little action, right? So again, the action has been quite interesting. Now, in terms of, in terms of CAD, what's going on CAD? So if you look at CAD, this is a tricky one here because, you know, we've got the unwind, we've got CAD data, we've got, you know, the funky action on crude. So we could see a lot of wheeling and dealing. Now, in terms of the bigger picture on dollar Canada, what has been going on? So this is not the feed. We had another feed on here which had a nicer, let's see if they can, is TradingView a little bit slow here? Should be, is it on this? It's not showing the IW. Let's US. Okay, I think it's this one. Okay, there you go, right? So what we've been saying is it looked like we're trying to attempt a rotation higher, but it was very sloppy, right? And we had a lot of wheeling and dealing on crude. So our take was still that any moves back down into here, we're still buying opportunities to try and play a rotation higher, okay? Here it's tricky, right? It's tricky because all things being equal, we're still trying that rotation. And as I said yesterday in the live webinar when we were doing it, we said, you know, gun to the head, you have to get long into these moving averages. You have to get long into the support. You can't get short. The problem with this is that it's making lower highs. So it's not that nice. It would have been much nicer to see this rotate higher and then buy and move back down for a continuation higher. Does that make sense? So it's a tricky one, but clearly here, as long as this holds, right, and if you see some bids coming back in on crude, you know, you'd expect this to continue to try and rotate higher. The problem is it's just a little bit messy. It's not that clean, right? But here you have to respect all this support. That's the issue. You really have to respect all that support. But we think globally that it's extremely choppy inside all these areas and that there's very little edge until we really break out of this. But ultimately, we would expect, no matter how much chop, we would expect the break to come to the upside and not to the downside. Okay? That's what's going on here, or at least that's what it looks like. Yeah, you know, we've had a lot of, on Aussie, this has been, you have to respect the resistance, but it's been very, very tricky. You know, we've talked about that 77, right? And how that 77 just keeps on getting sold. So it's really hard. This is like crude. It's very hard to want to be aggressive and get long inside a brick wall. No matter how long a level is tested and it may be weaker, you have to respect it. So here there've been a lot of opportunities to try and get short intraday or from a tactical basis, right? Even if you look at it, you know, the guideline is there. It's the 77. Right, that's the only thing that matters. That's the chart. That's the line that matters. And you see, as we've been trading into that 77, I don't know why it looks like this TradingView is slow here. Let's see if it. Let's try and update it and see if it gets a little bit better. I don't know. Has anybody been having any problems with it today? It's been a little bit slow recently. I know they've had some issues. Let's see if it can load. But here we go. It's trying to load. Okay, so let's see. AUD USD. Let's do it this way. It's messed your whole PC up. Yeah, I don't know why. It seems very, very slow. So here you go. Here we go on the, I know they've been having some issues. Let's see if it'll load the 1 hour. There you go, right? So you see how it's being choppy around this 1 hour, but we had this failure at high. So there was a nice opportunity to get short on this failure, but the problem is you're still above that level, right? So I don't think it's been a pure play to the downside. I've been trading some scalps to the downside, but I don't think it makes an awful lot of sense to to be aggressive as long as it was holding above the 77. Now this move is constructive, right? Because what would a lot of people be looking at, right? You look at, we failed back, double top, back below that 177, right? And guess what? Any move higher, Anna, right? That 77 is going to come in pretty much with the 50 back of this puke. So right now, any move higher will likely get sold, or should get sold, if the break below the 77 is strong for a bigger correction, right? Now, what is the biggest question to ask on a day like today after you're starting to see bigger cracks emerge and bigger moves play out, right? Is it even going to get there? Right? Is it going to get there? Right? Again, and this is running much longer than I want it to. This is what happens when you get excited with the markets. So the big question is, right? Is it going to get there? Because if this is going to get sold in extensions, you'll probably see the sellers coming in much before. And that's the tricky thing when you get breaks on days like yesterday. You don't want to chase, but sometimes, the train may have already left the station. That's why I said in the blog update today, the best move might be the one you're already in. So it may be worth either waiting for the breaks and selling the breaks, right, with sell stops or buy stops and tight ones on a day like today. But here, the question is, the top may be in, right? So we'll have to see, but as long as we hold below the 77s, I think this is constructive for a bigger correction now, right? And I wouldn't be surprised to see some dollar strength coming back into the picture. So I like this, right? I like this. Kiwi, again, similar kind of action. I think the Kiwi is nicer to the short side, right? Let's get on the daily. If it loads, doesn't look like it wants to load. But I think the Kiwi, oh, there you go. I think it's nicer to the short side, just folded. We traded this to the long side. Remember, we were looking at this the other day. Actually, I think it was live, or we did one of the updates or something. And we said, we just don't understand. Why would you want to get long, short into the hole here on Kiwi? Is everybody's positioning short? You have to respect this huge level. So we traded this actually to the long side into FOMC, flat up, and now it's time to get back short if this is going to roll, right? You got a nice little correction right back into this level. You've got the previous support acting as resistance. You've got all the moving averages, which are going to come down. So if anything, this is the place to try and play that break, and you've got much nicer location, much nicer asymmetry in your trade than having to get short at here. Here, nice little short you need to cover for a healthy market, and then you get back into the trade if this is really going to break down, right? We don't look at RSI, any oscillators. We don't look at any of those. No interest to us. If they work for you, great. We're not huge fans. We don't really believe in oversold or overbought in that way, simply because we think it may introduce unnecessary bias, and it might really hurt newer traders, less experienced traders, more than help them. Okay, but again, if it works for you, it's great, right? So again, a lot of interesting action. Yeah, Euro. Euro, what's going on Euro? So again, Euro, we've been structurally long Euro since last year, right? We kept on thinking, saying we don't understand how anybody could want to get short into those 0450s. We're long, and we've been talking about this, looking for a correction back to a 111, 115, much bigger correction, possible squeeze here. Now, intraday, as everybody, their grandfather, their pet hamster, their pet goldfish is probably trying to get long Euro, we're more than happy to try and play tactical to the short side. The only level that really matters here is how this is going to react around the 108 short term, right? It seems to be fairly choppy around this zone, and we'll have to see how we behave. But clearly, even if you look at this on the 1 hour, right, you've had this nice little break, and it looks like the market is trying to bid this break, right, trying to continue to extend higher and continue the squeeze, right? So the only thing is we'd be a little bit cautious here in case you get a little bit of an unwind here, but it's bid. I think as long as this doesn't break and we don't get closes above here, it makes sense to try and scalp this to the short side. I actually traded tight shorts yesterday, nothing today on euro, but you know, as long as that, I wouldn't be surprised to see a little bit more of a correction, right? And it could correct a lot more and still hold an uptrend, but I think euro is probably the least interesting trade this morning, right? Yeah, sure, let's do that. Spirit of full disclosure. So euro GPB, couple of trades I'm in and I took this morning early. So I'm long euro GPB for a little scalp to the upside, right? What I liked here was basically the fact that we saw price coming back down here and we kept on seeing it unable to get any traction to the downside, right? So a little scalp long here. What would be extremely constructive now is to continue to see a little bit of action back above this breakdown zone, right? And hopefully here we get a little bit more of a squeeze and we can take out some more upside. For me, this is just a tactical scalp. We're already off those lows, 15, 20 pips off those lows. It's a decent little trade. And even if this is heavy, I like this action into the morning to try and scalp some to the upside, right? And the other trade I like here, and I'm focusing on, I think is going to be an interesting one, even though from the structural basis it's changed a little bit, is cable, right? The questions are only for me. We had to disable those a couple of years ago after people were getting a little bit silly with the public chat. Yeah, you know, I used to do this live every Sunday for an hour, but then people started getting a little bit funky, so we had to cut that. So here what's happening is cable, you see how we went into that 125 and we got a rejection, unable to get a traction above that earlier on today. So that was a very nice, even on a shorter time frame, on a 15-minute chance to get short for a little scalp. Again, it's the same trade as the euro GPB. The only thing is we feel that the cable might have a little bit more legs, right? So what that means, if you see that on the 15-minute, is we went into that 125 round number, clipped a lot of weak players, shorter term players on the round number play, and bang, closed negative. These are very nice with very, very tight risk, opportunity to get short. See how we failed to hold above this whole break for a little correction back down. And as long as this holds now, what you would expect this, right, back into 2440s to come into play, being fairly interesting. So you see what that means is getting short 2490s, you know, with a stop above these highs, you're talking about very tight risk. If we're going to get that nice move into 2440s, you know, more than happy to take this kind of risk reward any day, you know, eyes closed. So it's fairly interesting action here. So again, be careful on equities. Don't get stubborn. I think the gold's just been a beautiful tell, right? You know, we've been talking about this since last year, but especially when you see equities continue to skyrocket higher, you see the hike, et cetera, and gold keeps on rotating higher, it keeps on catching bids. You know, something's going on, right? Something's going on. So you have to pay attention. And we've talked about this, we had a nice little long off last year into this retracement. As we said, you have to be crazy to get long into a brick wall in this 200. This was a nice chance to take profits all the way into this move. And then as we came back in here, we talked about it pretty much live when we were talking the zone. We said to us, the risk reward was compelling for a rotation back higher, right? And basically, as we came back down here, you know, it was just about 2% risk on the trade for a potential 8% back to the upside. And again, this is working out quite nicely. You'd have to respect this level, but again, you know, we can't complain, right? So again, guys, already running a little bit more than I wanted to. I hope this was useful. We'll continue to try and do these, Wednesdays or whenever I can. Don't hesitate to ask questions. Thank you so much for liking, for sharing the content and everything. I really hope people are enjoying the updated stuff on the blog with a little bit more text, a little bit more meat to the posts. And again, see you guys on Twitter. Have an awesome one. Talk to you guys soon. And again, take care, guys. Thank you so much. Have an awesome day.